Hello everybody, welcome back for another video. Hope you're all doing well and that you are all having a great day. Bit of an absolutely insane day for cryptocurrency already, but without further ado, let's jump right into it. Ethereum Classic Labs Incubator has launched a new Ethereum Classic development team called ETC Labs Core. The company has unveiled in a blog post published a couple days ago. According to the announcement, the new team will be working on core Ethereum Classic projects, supporting the coin's blockchain and providing tools for decentralized application development, mining, and services. In the first quarter of 2019, the team will be purportedly focused on reviewing Ethereum's Constantinople hard fork, which is set to happen around the 16th. I will get to that in a bit. This will be done prior to finalizing the Ethereum Classic Improvement Proposal 1045, which will introduce support for some parts of Ethereum's Byzantium and Constantinople upgrades on the ETC network. During the rest of the year, the team is set to work on related issues such as chain monitoring and analysis tooling in the wake of the 51% attack on the ETC blockchain that took place this January. As Cointelegraph previously reported, cryptocurrency exchange Coinbase detected a 51% blockchain reorganization on Saturday, the 5th of January, and indicated that this was a 51% attack involving over $1.1 million in crypto. Ethereum Classic developers first denied the report after the attack, stating that the double spending did not take place in the network. However, they did ask all the exchanges and mining pools to significantly increase confirmation times on all withdrawals and deposits. What's significant about this is, at least to me, one, it's nice to hear that the Ethereum Classic team is still developing. We had a rather more actively developing. It was clear that they were still around, but we had news a couple of weeks ago, for those who remember, that they a certain part of their workforce had been either let go, or like one of the dev teams, the development teams, had been completely kind of washed out, and this kind of caused a huge fervor amongst the cryptocurrency community because a lot of people believed that the Ethereum Classic project had completely dismantled, especially since we didn't hear anything from the actual Ethereum Classic people for about a week or so after that. It appears they're still alive and kicking. They have now established ETC Labs, which is great. Very weird day for Ethereum overall, and I'll get to that in, like I said, in a little bit, but it's very nice to hear that we have some good news from the Ethereum Classic team. I know there are a lot of people out there who believe in Ethereum Classic and what it stands for, so let's hope that they continue to do so and that they continue to further do well, especially as we move forward in the cryptocurrency space. Yeah. Next up, multiple Bitcoin ETFs have been proposed in the last year, and there still has yet to be one to be approved by the Securities and Exchange Commission. While pending decisions still have given a chance of approval, maybe, a New York investment management firm named Wilshire Phoenix is pushing forward. According to reports, the firm has officially filed an S1 with the SEC for a Bitcoin ETF of their own. The trust that they have suggested, they called United States Bitcoin and Treasury Investment Trust, my goodness, is meant to hold short-term U.S. Treasury bills, U.S. dollars, and Bitcoin. The filing noted, and it says, the purpose of the trust is to provide investors with exposure to Bitcoin in a manner that is more efficient, convenient, and less volatile than purchasing stand-alone Bitcoin, end quote. The filing continued on saying, while the shares are not intended to, nor is their purpose to, replicate a direct investment in Bitcoin, they seek to provide investors with exposure to Bitcoin with substantially lower volatility than a direct investment in Bitcoin, and without the uncertain and often complex requirements required to acquiring and or holding Bitcoin, end quote. A representative for Wilshire Phoenix said that the combination of both dollars and the treasuries makes it possible to eradicate the volatility that the SEC worries about. Bill Herman, a managing partner with Wilshire Phoenix, emailed news media website MarketWatch saying, this was made possible by my team, a group of dedicated experts, each of whom comes to Wilshire Phoenix with a unique background. Trust to those diverse backgrounds, we were equipped to structure this offering, which is a preeminent example of what occurs when minds meet, end quote. Herman realizes that no other Bitcoin ETF has been approved, but he has a message. I'm not going to, you get it. This is one of many, I think this is probably the third or fourth, maybe even the fifth ETF that is up for possible approval by different firms around the world. I think we still have the one from the CBOE and VanEck. And then we had like two other ones who popped up before. We had another one a couple days ago. And now we have this one that's kind of floating around as well. To be fair, what seems the weirdest part about all of this is that this one, unless we get some type of magical event where the CBOE VanEck one that we've been talking about that's supposed to happen in February actually ends up getting pushed through, which I have zero hopes for. If you have any hopes for that, slam it down to the ground right now. This one seems like it could be the most realistic, simply because the SEC has noted many times before the reason why they are not approving a Bitcoin ETF is because of the volatility in Bitcoin's price, as well as the actual custody of having to hold the Bitcoin by the people who are doing it. Every other Bitcoin ETF thus far, to my knowledge, especially the ones by the Winklevoss twins and by VanEck and SolidX, whatever the names are, and CBOE, have all been the like physical Bitcoin type thing, and it was centered specifically around Bitcoin. The one that they're trying to do is that they're trying to hold treasury bills, US dollars, and Bitcoin. And it appears that they're trying to give exposure to their investors without actually them holding the Bitcoin themselves, especially as like a standalone Bitcoin investment. This seems to be what the SEC had a problem with, that the price of Bitcoin was too volatile, that the custody solution for Bitcoin was kind of all over the place, and that so-and-so with Bitcoin was just not up to their standings. So if they have an ETF that is based on US dollars, treasury bills, and one can only assume that this is probably, if they're logically doing it, a 33.3% split between the three of them, maybe this has a chance of being pushed through. I don't know the exact hyper significance of a Bitcoin related ETF being pushed through, or an ETF that has Bitcoin attached to the exact name of it that is also denominated more heavily in US dollars and US treasury bills. And if that has a bit more of a fighting chance of actually being pushed through, it does seem logical. The SEC before, they've kind of had problems with standalone Bitcoin investment vehicles. Let's see if this actually gets pushed through. But before you decide to inflate that balloon and get your hopes up once again, keep in mind that they've rejected 4 years straight of Bitcoin ETFs. And whenever we had news about them potentially reviewing one, the SEC has, I don't remember the exact number of days, but I think it's a couple of months before they're actually able to say no twice and then say that they're going to finally finalize their review. And then they usually, as always, have all ended up saying no. So I assume we will probably not hear about this particular Bitcoin-related ETF for another, let's say, June, July, August, somewhere around that time frame. I have a feeling it might be even a bit longer. But, I mean, the idea has always been amongst institutional investors that the moment that we get a Bitcoin ETF approved by the Securities and Exchange Commission, this will kind of open the gates for everyone else to kind of be able to flow through, because everyone can simply mimic exactly what they did. And yeah, that is how the story goes. Let's move on. Next up, LedgerX has launched its first Bitcoin price volatility index. The launch of LedgerX Volatility Index, or LXVX, was revealed to Cointelegraph by a company spokesperson a couple of days ago. LedgerX is a cryptocurrency asset manager regulated by the United States Commodity Futures Trading Commission, or the CFTC. The official press release shared with Cointelegraph explains how the index is formed. They said, the LXVX incorporates the level of fear and uncertainty in the Bitcoin market, and thus can be thought of as a Bitcoin fear index. In the same way, the VIX is commonly referred to as a stock market fear index by market commentators, end quote. According to the press release, the company will draw the data from LXVX from the Bitcoin options product that it already offers to its customers. LedgerX's COO, Juthika Chu, has said that the new index can help traders and investors monitor risk. Chu also noted that the LXVX is currently down by about 20% from the beginning of the year. While LXVX isn't a tradable product as of now, making it one is reportedly part of the company's plans for the future. This is, just to touch on this briefly, if you will, this is another foray of the cryptocurrency space slightly tiptoeing into the traditional financial markets. we have fear indexes and we have other things like this I mean, it kind of sounds like exactly what it is. The same, I don't know if you guys remember a couple of months ago, we had something else very similar to this. I'm not sure if it was an exact fear index, but it pretty much manages and shows, at least the other one, especially that I assume this one as well. It'll show the exact how greedy people are in the market and depending on what's going on, or if we are entering a period of fear in the Bitcoin markets and exactly if markets are going to start moving in an adverse way compared to where they are now with the price. Just very interesting. It was not too long ago where we believed that crypto would be completely separate from the traditional markets. Lo and behold, as time continues to go on, especially throughout 2018, I think a lot of people didn't notice that this was happening. If you compound all the news that we had during 2018, it is fairly clear that crypto is, depending on how you look at it from different angles, crypto is pretty much traditional finance at this point. You may not believe it. You may say no. If you look at all the clues, cryptocurrencies have been set up during the end of 2017 and during 2018 to pretty much match traditional finance. Maybe not the same prices, maybe not the same movements, what have you, but they're looking to put the exact same things that they have for traditional finance to be able to have people from traditional finance into cryptocurrencies so that they understand it a bit more. This is why we have like futures, perpetual swaps, why we have fear indexes, because they need to, in theory, be able to understand crypto a bit more without having to have like all new terms and stuff like that. But anyway, thought this was kind of interesting. Let us move on. So this is I should have expected this, but I had higher hopes. Ethereum's Constantinople hard fork faces a delay over a newly discovered security vulnerability, allowing a re-entrancy attack. The critical issue was detected by a smart contract audit firm Chain Security and reported in a blog post on the 15th of January. That was yesterday. According to the company's report, the Constantinople upgrade introduces cheaper gas costs or transaction fees for some operators on the Ethereum network. As an unexpected side effect, this allegedly enables re-entrancy attacks via the use of certain compounds or commands and the Ethereum smart contracts. A re-entrancy vulnerability allows a potential attacker to steal cryptocurrency from a smart contract on the network by repeatedly requesting funds from it while feeding it false data about the malicious attack's actual Ethereum balance. Afri Shoden, the hard fork coordinator at Ethereum and release manager at blockchain infrastructure provider known as Parity Technologies, has confirmed on Reddit that the core developers of Ethereum are aware of the vulnerability. Shoden explained that an all-core development call has been scheduled for, I guess, 2 days from now on Friday to decide on further steps in relation to the newly discovered loophole. According to him, the launch of Constantinople has been postponed until at least next week. He said, "We will decide further steps on Friday and the all-core devs call. For now, it will not happen this week. Stay tuned for instructions." On the same day that the vulnerability was discovered, Ethereum's core developers said that they expected the upcoming fork to be the least eventful one in the history of Ethereum. Their remarks were reported by Bloomberg article on the 15th. That was yesterday once again. So as it appears, we had a situation last year where we were supposed to have gotten Constantinople, the mega major super insane Ethereum upgrade, by the end of October. I'm pretty sure you all remember this, and then it was November. This is why I said I think it's very weird. I don't know if it's just something in the air. I don't know if it's just life, and you know how you always want something, but it takes a bit longer before you actually get it. This was an update talked about since around 2016. There were whispers of it around 2017. Remember we were talking, for those who were here, in 2017, we were expecting to potentially maybe get proof of stake for Ethereum by the end of 2017, and then the date was moved around to, they said they needed to finalize everything, and it would be by the end of November 2018. That ended up being pushed back, and I think there were whispers of around December, and they said, nope, we're actually going to wait to January 16th or 15th, what have you, and this is going to be the final date. And I thought it was really interesting because I saw the actual, there was like a live thing on YouTube, and I saw the actual title of it, and they were talking about it. It pretty much said this will be the least eventful hard fork that Ethereum has ever had. Lo and behold, it's actually incredibly eventful because it's taken years at this point. So this appears like it may not happen until sometime next week. I mean, like I said, I should have been surprised, but I'm not really that surprised. Tying directly into this news is something, I mean, you'll get it. So pretty much, I think this came out a couple of hours before this actually ended up happening, before we got news that there was going to be a delay for the hard fork. Charles Hoskinson decided to push his nose into it and kind of make fun of Ethereum before the actual launch of Constantinople actually even ended up happening. Hoskinson, who is the public face of Cardano, the same way that Vitalik Buterin is the face of Ethereum, has used the opportunity to launch some jabs at the Ethereum community, which is a sort of rival to Cardano. Here's the actual thing. For some reason, he says, "You like apples? We got them for you." According to Charles Hoskinson, Ethereum's upgrade might be important, but he will not be able to do what... Oh my gosh, these articles. But apparently won't be able to do what Ethereum has been promising for years, to implement its proof-of-stake system. On Tuesday, he spoke on Twitter about it and also used the opportunity to attack the critics of proof-of-stake method, which believe that it may cause some inequality among node operators. He claims that one of the main complaints that proof-of-stake receives is that it is less egalitarian and that it makes the richer. But according to the paper that was co-curated by the academics from Athens and the Edinburgh universities, proof-of-stake cryptocurrencies can be perfectly egalitarian from the parameters of the crypto world. The main reason for the jab at Ethereum is because proof-of-stake is the very old promise that simply was not delivered, and the Casper protocol, which is supposed to make it true, will only be launched in 2020 or thereafter. The new protocol may be important, but it will still not bring Ethereum the most important changes that it needs. For those who have no idea what I was just talking about, there's a coin called, or rather a project called Ethereum, and there's one called Cardano. And the idea is that the guy behind Cardano, Charles Hoskinson, has stated many times before in the past that they have perfected something called proof of stake, which is pretty much where you don't use all the big computers to mine cryptocurrencies. You can simply use your own laptop or desktop computer. You simply have to have the coins. You simplify it, you put it into the system, and new coins are created for you in this way. The Ethereum project has announced many years ago that they were moving over to proof of stake and have not done so yet. And Cardano, apparently, according to them, have already simplified and perfected the proof of stake system, which Ethereum has, in all honesty, had trouble implementing over the last couple of years. So it was kind of interesting that he decided to make fun of Ethereum right before they even announced that they were having problems implementing Constantinople. So to be clear, Constantinople is not proof of stake. It kind of lays the ground. Imagine you're building a house and you have to lay the ground before and all the piping and stuff like that. This is kind of what Constantinople is. It also lowers the amount of Ethereum that are going to be released into the ecosystem from 3 to 2 every block. It's fairly significant. It's something that we've been waiting for a long time. I would prefer them take their time with doing this, obviously, as they have done. Sorry if you hear the banging in the background. I can hear it. This is why I mention it. But yeah, at some point, so Casper, I mean, at this point, we heard that we are supposed to have proof of stake heard. We're supposed to have proof of stake by the end, potentially, of 2019. Just because of all the delays that Ethereum has kind of given us, I am fairly certain that we probably are not going to get it until around probably 2020 or 2021. Listening around on podcasts, I was listening to stuff yesterday before we even got wind that all this stuff was happening or that it wasn't going to happen. And a lot of people are very, I hate the term bearish because it sounds really weird, but a lot of people are very negative on the Ethereum project right now. Like I said, this was even before this got delayed once again. Simply because, and it's funny how tides shift very quickly. Crypto is a very quick market. Crypto is a very quick everything. Nothing really takes forever. So when you take multiple years to be able to implement something, especially this is the crazier part, when you have Ethereum rivals, when you have Tron, when you have Cardano, when you have Jupa coin, I can't think of it, EOS, coming out there, and they can kind of do what Ethereum can't do and what Ethereum has been saying that they were going to do for the last 2 years. It's a bit worrying. I love the Ethereum project. Like, it's actually one of my favorite projects. But not that my support is waning. It's kind of like, if you're going to do something, tell me about a month or two before you actually do it. Problem that we've had with the Ethereum project is that they have announced things years before, and even then, at that time when we're supposed to get it, it still has not happened. They've been talking about proof of stake for a year and a half, somewhere around there, and if it takes 5 years to fully implement it, we have other coins that already do that. But yeah, try to end it on a somewhat lighter note, but Ethereum really has to get it together. At the time, prices are not doing that bad. This was actually a bit lower on the 24-hour charts. Ethereum was down by around, I think, 5 to 7%. It seems to be trying to slowly push its way back up on the 7-day graph. It's not doing that bad. It's still in the green, but this definitely made it take a hit. What was interesting as well is that we see normally situations, because Ethereum is a major base pair on just about every single major cryptocurrency exchange. Typically, when we see Ethereum fall by a large amount, the rest of the market tends to follow somewhere within that range. Ethereum fell by 7%, and I think every other coin barely fell by even 1%, just kind of showing the sentiment for Ethereum at the moment. I mean, for what it's worth, it is apparently supposed to happen sometime next week. Let's hope that it actually ends up going off without a hitch. Ethereum may not have as large of an influence on the cryptocurrency prices as Bitcoin does, but we have seen before in the past when Ethereum shoots up, the rest of the market tends to follow at least a tiny bit. So it would be a bit of relief if Ethereum does actually end up having this implemented and the crypto prices can go up at least by, I was going to say, a 10-15% increase. That was being too optimistic. At least having, us finish the week in the green. Anyway, that is definitely going to do it for this video. I hope you all enjoyed. I hope you all are having a great day, a great morning, a great afternoon, a great evening, wherever you are, wherever you might be. I hope it's absolutely fantastic. Thank you all once again for watching and listening. I am still pretty excited about the Binance fiat pairs. I'm assuming that they are going to expand this, and I didn't really mention it before. You may have noticed that the fiat pairings are very specific, and I think that has to do with the U.S. Not wanting many players in their sandbox right now. I assume that will change over time, but just kind of goes to show that's really maybe that was all subconscious. I didn't even realize I was actually floating on top of Binance Coin. That's actually very weird. This goes to show that the crypto market will continue to move forward, even if the SEC decides to take their time. But yeah, I'm awful at ending these things, and I'll talk to you all soon. See you.